Welcome to Business Talk, a global podcast series where we bring you closer to some of the world's most distinguished scholars and their ideas. I'm Deepak, your host from India. We are honored to welcome Dr. Sibel Kusimba to Business Talk. Professor Sibel is Associate Professor of Anthropology at the University of South Florida, whose work bridges East African archaeology with the anthropology of money, digital finance, and fintech in the global south. Her research brings together long-term historical perspectives with contemporary transformations, examining how economic systems are embedded in social relations. Her fieldwork in Kenya spans themes such as inter-ethnic cooperation, leadership, environmental change, and the historical foundations of trade. Since 2012, Professor Kusimba has focused on the rapid expansion of digital finance, exploring how technologies such as mobile money, digital lending, and crowdfunding reshape everyday economic practices, social networks, and systems of care and reciprocity. She is the author of African Foragers, recognized as an outstanding academic title by the American Library Association, and Reimagining Money, Kenya in the Digital Finance Revolution, published by Stanford University Press, which offers a nuanced account of Kenya as a leading site of financial innovation. Her work has been widely published in journals including Information Technology in International Development, the Journal of Cultural Economy, African Studies Review, and Economic Anthropology, with a particular focus on how financial technologies mediate gender relations and social ties. Professor Kusimba's research has reached broader audience through media engagements with the East African, Voice of America, and Business Daily Africa, as well as features in platforms such as Next Billion. Her work has also been highlighted through public scholarship initiatives, including projects with the Institute of Money, Technology, and Financial Inclusion and the American Anthropological Association. Her contributions have been supported by numerous prestigious grants, including multiple awards from the US National Science Foundation, several IMTFI grants, and two Fulbright appointments in Kenya. She has also held research and teaching positions across the United States, Kenya, South Africa, and China, reflecting the global scope of her academic engagement. Today, Professor Sibel Kusimba joins us to take us inside her fascinating book, Reimagining Money, Kenya in the Digital Finance Revolution. The book was a finalist for the 2023 ACA Book Prize awarded by the Society for Economic Anthropology of the American Anthropological Association. Let's not keep you waiting. Please join me in welcoming Professor Sibel Kusimba to the podcast. Professor Sibel, it's a truly privilege to have you here. Welcome to Business Talk.
Thank you so much for having me. It's quite a flattering introduction, and I want to thank you so much for having me. I'm really looking forward to this conversation, and I really admire this Business Talk series, and I think it's wonderful to reach new audiences through the work that you're doing. So thank you so much for having me. I'm very, very honored to be invited. Thank you so much.
Thank you, Professor. Professor, what first drew you to study digital money in Kenya? And why did M-Pesa become such a powerful lens for understanding social and economic change?
Thank you. That's an excellent question. I first began looking into this topic in 2009, and it ended up being a moment in time where there was enormous amounts of change happening in terms of the way people in Kenya were handling money on a day-to-day basis, right? So you have the introduction of mobile phones in the early 2000s. And then the introduction of a money transfer service in 2007. So people are moving from cash to suddenly a way to transfer money to friends and relatives across space in an instant. And so this money service from the very beginning was really intimately involved with the way friends and relatives and social networks transferred and circulated money amongst themselves. And it's quite interesting because my first interaction with with mobile money, as they call it, which is a system for, transmitting money on non-smartphone at that time, non-smartphone mobile phones, was actually the airtime money, which was in fact the first mobile phone currency. So airtime money, could be sent using a text message. And I was taught how to do this by my sister-in-law, Bernadette, how to sambaza, which means in Kiswahili means to spread the money. And airtime is just kind of a gift. It's a small amount of money that is given to say thank you, or it's given to say hello to someone. And this gifting system, actually, through understanding how that worked, I was able to connect the money not so much as an economic entity, of course it is, but more about the relationships that it was building and that it was making. And really, the view I took of money in general came from this more kind of social perspective. So, being an in-law in this Kenyan family, I was able to see like how much this technological change was really modifying the relationships that people made with money. Instead of visiting your grandmother in the rural areas and making that trip to see her personally, it is now possible to simply send her some money to say hello. Please go to the store and buy some tea and some sugar, instead of in the past making that journey and bringing those gifts, right? So there are advantages and disadvantages for both parties in that relationship once you can phone it in, so to speak, right? And so I was really just lucky because that time frame of 2000 to 2010 was that period of like dramatic scaling of M-Pesa. And M-Pesa is famous in the fintech world, of course, because of the dramatic scaling that they were able to achieve and the large number of users who enrolled and began using M-Pesa. And it's really all about that need to connect, oftentimes, uh, people who work in urban areas with their families in the rural areas. But what's interesting is that now it has become that everyday money, and it has a variety of meanings and circulatory paths for people, but the origin of it was this airtime gifting. So.
Professor, your book shows that digital money does far more than move from cash from point A to point B. How does it help people build, maintain, and expand relationships?
Thank you so much. That is really my core argument. Money is not a neutral thing in this book. Money is not a purely instrumental or utility. It's more than just an exchange of value. It's a medium through which people create, calculate, represent the value of relationships. And here I'm drawing on scholars like Bill Maurer, of course, especially, and Viviana Zelizer. And Viviana Zelizer is a sociologist. Bill Maurer is an anthropologist, and both of them have developed this concept of the social meaning of money. So money has this social meaning, in addition to that economic utility that we like about money. So airtime, mobile money, they let people enact this obligation that they have to each other across a distance. So the sambaza gifts, kind of flashing people when you want them to call you back, right? Because you might not have that airtime, but you expect this other person to have the airtime. I don't know if people do that in India, but it was very common in Kenya. So when you have a relationship where it's assumed that one person maybe has more money than another, then that subordinate person can just flash you and then you have to call. So this kind of social positioning is what is communicated when these cultural habits with phones, get developed. So it's another way that people not only send money, but they judge the value of their relationships, or they judge who is obligated and who is subordinated, and it's all kind of fits in with the social system. So it's quite interesting. Digital money also, it mainly what it does and how people use it, and it's really quite interesting, and there are a lot of development implications of this concept of sambaza, then, of distributing, becomes really important. Because if you're thinking now from a context of development, or from even from an economic context, that social process of distributing money has real economic outcomes. In other words, this ability to bring money to the rural areas, the ability for women who are in the rural areas to receive money on a phone from their son or daughter or another relative. This has potential, at least, to really expand the reach of money and the access that many marginalized people can gain to money. And I give some examples in the book of how women are, especially women in rural areas, they may have a lot of children, and they are in fact receiving large amounts of remittances. And it is a terrible shame in many rural areas, particularly in Western Kenya, to let your mother languish in the rural areas. And lately, there have been, more and more investment in making sure her house looks nice, making sure she has the latest, new appliances and so on. So it becomes a mark of like middle class status or a successful family when your mother is well taken care of. So people take this very seriously. And if you don't take care of your mother, people will wonder what kind of family this is. And so, there is now a big influx of capital, so to speak, into the rural areas. It's not, to kind of invest in the status of the household. Um, and this distribution can also involve welfare societies, the many rituals and festivals that people have. All of that also builds relationships and enables the migrants who are in the cities to also, claim that they are present and they are there and they can belong. And so it gives them a little bit that ability to be in two worlds at the same time, because they are not present in the rural areas, but they've provided, tangible additions to the rural area, and that gives them a claim to perhaps come back and retire there, or perhaps to profit when that farm is sold. And so it has clear economic implications as well. So digital money is doing a lot of the work that, traditional forms of money have been doing here. When you talk of goats and cattle, this is a part of East Africa where these are long-standing forms of money, of course. And so they've circulated when people got married and when people inherited money. And so it takes on some of those pathways too. And it builds that sense of community and collectivity as well. So it fits in with certain long-standing cultural ideas about how money should keep moving. This is oftentimes a setting where hoarding or being greedy can, really be very frowned upon. So that pressure that people have to spread out and to sambaza, it can also be difficult for people who are high in status, because they have a harder time protecting their wealth from many requests. And so that spreading out can also diminish the economic standing of the high status individual because they often receive many requests. They have to turn off their phones, or sometimes they just throw their phone because they're so tired of the many requests. So there are winners and losers here, I think, in terms of the the movement, how the movement of money and the movement of capital fills a gap and brings in new access, but also might level out, the people in urban areas who are under even more pressure now to help their relatives. And, they often call it the relative tax, the tax that your relatives impose upon you. And, these are, of course, very important things in many cultures. And they're constantly being rethought, and people are constantly asking themselves, well, what do I owe other people? What do I owe my friends and relatives? And, it creates, I think, a very interesting questioning of some of the social norms around friend and family borrowing and the relationship between the individual and their community.
Professor, you write about money as wealth in people. How does that idea challenge conventional economic thinking about what money is for?
Good. Here I follow, of course, a long tradition of anthropologists with this concept of wealth in people. There's a long, history of literature on this idea, but essentially the idea is that, like in a conventional sort of capitalist framing, sorry to use that word, it's not really the right word, but in a kind of conventional common sense about money, right? Money is a medium of exchange, and it's a way of investing in producing things or buying things. So money is about developing wealth in things, asset building, right? Maybe you want to, buy a house, or you want to buy stock, or, it's all about a way for a medium of exchange that allows you to buy, valuable things, roughly. And so that's kind of the common sense that we have. And then there's another idea that comes out of the African mindset a little bit, and the anthropology, which is that money actually brings wealth in people, not wealth in things. So it's about gaining those privileges. It's about gaining access to people. It's about gaining followers, friends, admirers. It could be about gaining rights in people. If you have paid school fees for someone, your niece or nephew, then they will come when you're old and take care of you, right? So there's some reciprocity there. But there also is potentially the opportunity for greater social prestige, or inequality perhaps emerging. If one person develops a great many of followers, then they becomes a person of prestige. So this is another idea. Of course, we find that in all cultures. But I guess it's an idea that comes out of Africa because of certain institutions there, bride wealth. And again, this idea of circulating and distributing wealth was about building your status as someone who can help others, as someone who is generous, as someone who can support a community. This is in many, in the literature of many African societies, one of the best ways of becoming a high status person. It's not so much what you have, but the people you have enabled and help, and the people who are in some cases dependent on you, right? So, this is a little bit also what people are doing, by spreading out. It's not so much that they're being generous or, altruistic, like thinking only of others, they have their own desires and benefits that they receive, and, enormous social prestige, even political power, political figures in Kenya are often giving out, and of course, this is all over the world, right? Giving gifts to gain followers or support. So even political figures can use this system. And I think the other thing I should probably say here is that because I've mentioned cattle and goats and all these circulations, there's one really key difference in terms of the material aspect of mobile money, which is that it is often very private and very personal and very intimate. And unlike in the old days where, the cattle and goats are obviously very visible and very circulated, and those gifts are noted in the community. With mobile money, as we all know, with our phones, they are very personal. Our phones are very personal, and that hidden aspect of money circulated or money on your phone that you don't have to tell your spouse about or your other close friends. This private gifts also create a lot of conflict, and they change the nature of money, and they make the difference between what is hidden and what is public very, very important for people. The hidden aspect of mobile money or of like M-Pesa is also associated with like bribe, or maybe you are supporting a hidden wife, this kind of thing. And so it also is very, very sensitive to people. That opportunity to be private and secret, it can really be very disruptive of established relationships. So people have to be very careful, like, about money. It is now a question of, is it private or is it public? And how do people struggle through those dilemmas? Like, for example, if you have two wives, you better make sure that they're given equal, because then they will talk and discover that the amount that is given is not enough. And they also have phones, so they can talk about you behind your back. And so I interviewed some of the old mzes, and in this particular area, the marriage of more than one wife was common, and it is not so common anymore. But among the older men, they still may have multiple wives, and now that they all have phones, they say that they have to be very careful to treat them equally. So, you may think that you have a lot of power if you have many wives, but in fact you don't. So, yeah.
Professor, one of the striking themes in the book is the way migrants use digital money to stay connected to rural homes and kin. What does this reveal about belonging and obligation in contemporary Kenya?
Thank you. So these digital money sending or remittances, I'll use the word remittances, when money is sent. And we often think of a remittance as from one country to the other, which it can be, but it can also be within a country. But these digital remittances allow people to straddle multiple worlds, as I was saying. In a way, it's a continuation of what telephones and even automobiles have done for us. If you look at the history of technology, it's as if we are always trying to overcome time and space. We want everything to be faster, and we want mobility, maybe intrinsically as humans. Now that our world is so globalized, it's really powerful to be able to expand anywhere we want to go and things we want to do. So that is very, very important to people. And then it's a paradox because to show that obligation and that commitment to your home is also something people want to do. So it's as if they don't want to give up that connection. And this is also true of immigrants in our world. We have a world of migration, and there are so many diasporas and there are so many migrants. And yet, that sense of what your home is can be very, very important to people. And so people create that idea of home at the same time, and it's even more important today than it has ever been. And so to invest in that home, to send money home, it becomes a way of insurance also. And I think we know this from migrants we know. You're in a place that is new for you, maybe you are there working, but someday you want to go home. And, this is kind of a new thing in the United States when, or at least the story is that when immigrants came here in the 19th century, this was like a permanent move. And today people come and oftentimes don't really want to stay here anymore, right? And the world is not welcoming it the way it used to be. And so, people want that security that they can always go home. And so they want to be known there as someone who contributed and who can make claims to that value that is there in their rural home. So this is really, really important. Since I've done this book, I've been working with Kenyans who live in the United States and the way they send money home. And this is very, very true. They are, buying property, they are supporting their siblings, and we know that global remittances are enormous, and they are, something that this World Bank never really expected, but they've become, some of the largest forms of foreign investment that many countries receive. So it's a really interesting, we should stop and ask why. Why are remittances, so many billions of dollars? Because it's not as if we have gone for good. There are so many ways in which we want to be, we want to be multiple people, and we always want our home to be there. So it's quite interesting to me. On some ways, we can only change so much. But there's also a lot of ambivalence here. Remittances can hold together kinship webs, because grandsons will take care of grandmothers, but they also create real conflict, favoritism between parents, in-law secrecy, fraud. There's also a real concern now in Kenya with the safety of digital money systems and the way that fraud and scams beset many digital money systems. I'm not sure if you have that problem in India or not. Of course, in India is another place where digital money has really revolutionized so many things, and you have I believe, a government system where people are registered, and it's apparently very, very advanced from what I've read. But one thing in Kenya is that people are very concerned about fraud as well, and many people are victimized by fraud. Even their numbers, their PIN numbers, get taken, and then they lose a lot of money. So there's a very big case right now in the Kenyan government where Safaricom, which is the major provider, they are being sued, and it is a collective suit by people who have lost a lot of money. So it is quite interesting to see, will Safaricom be held responsible, and will they really need to do more to make this system more secure? Yeah.
Dr. Sibel, you discuss crowdfunding for emergencies, weddings, and
Mhm.
other major life events. What
Yes.
do these uses tell us about how communities are redesigning financial support systems through technology?
So I think this is really interesting now. This becomes the question of, okay, you have sambaza, you have these gifts and this circulation. Can this social giving, in a way, can this create real philanthropic, you know, evidence? Can it really be more than just gifting? Can it really lift people out of poverty? Can philanthropic organizations, you know, work in poor areas and really create positive change? So in the book at the end, I did some work. I was very fortunate to do some work with a crowdfunding platform called M-Changa. Kuchanga means like to, again, to collect. So it's the other end of the spectrum. When you have sambaza, you spread out, and when you have kuchanga, you collect. So when there is a wedding or there's a funeral, there's always a big meeting before, and you collect all these donations, right? So can that collection create real positive social change? And so by begin working with MChanga, one of the things that I actually started out looking at were these funerals, weddings, and other kinds of things. So I found this very, very interesting. Again, it's that idea that you need to be included. You need to, contribute. Contributing is very, very important. Actually, kuchanga means to contribute. That's really what it is. If there is anything happening, and people, they collect donations, you will get a text message, my daughter is in a beauty pageant and, she needs the outfit and she needs a crown. And, yes, put me down for the crown because I want to be, known. I want to be included in this community and I want to be known as someone who is helpful and can be counted on. So, it's not just financial transactions. There are these rituals that mark like when generations change. You have these weddings, the coming of age, the funerals. These are very, very important in this setting. When you mark the passage of time and people move through the life cycle, all of that is always recognized, and so that's very important. But I also think that the other thing going on with M-Changa are these philanthropic organizations that really are very, very successful. And in Kenya, there have been organizations looking at things like climate change, medical needs. The health disparities in Kenya are enormous, and oftentimes people have a hard time accessing care for things like cancer or other major diseases. So people fundraise for medical fundraisers, and that enables people to get care. And the key question here from a business point of view is, could we now create an insurance fund that would collect these individuals? Can we build something more institutional off of these informal networks? And I think that is going to be now the key for the business proposition in the future for, these money systems, because a lot of this is, of course, informal, but what can we build from that creates real lasting institutions? Can we design an insurance product that where people could form a collective, or a savings club or a financial club, informal banks, right? How can we use that circulatory power of money and all of the social needs and all of the social meaning that this system can produce? How can we create something that is more institutional? And I think insurance is one of the most interesting things because insurance is very unpopular in Kenya. People just wait until they get very, very sick and then they start fundraising, because it's hard to commit to those upfront costs of insurance. And of course, the government does have, there is universal health care, but it's oftentimes not enough for, a real emergency. And so, and it's interesting because many families and friend groups and communities have kind of created their own funds for these purposes, like medical funds, burial funds. So you contribute, and then you have that reservoir of funds and savings when you do have a death in the family or when you do have a medical need. So could these be institutionalized somehow, and could that lead to more secure, forms of security for people?
Professor, the book suggests that digital finance can deepen inclusion, but it can also produce new forms of debt and vulnerabilities. How do you think we should balance those possibilities?
I think this is a really important tension. And this is, in fact, the central tension of the book. So, mobile money has expanded access dramatically. There are maybe 50 million people in Kenya, and there are, almost as many accounts. The usage is above 90%, let's say. Um, and it has also produced new and quite serious harms. By one harm comes from these digital loans. By 2017, about 10% of Kenyan adults had defaulted on their digital loans. Large numbers of people have been blacklisted with the credit bureau because they haven't repaid their loans. And that's an example of financial exclusion. And we also saw this during the pandemic, which is that the digital loans, many people could not pay them back. There are several digital loan providers. One of the most common is a service that Safaricom offered called Fuliza, which is like a little bit of an overdraft. So if you're talking to somebody too much, then you run out of airtime. They give your account more airtime, but then the interest rate for repaying it is very, very high. Oftentimes, people may have these microloans on their phone, and then they realize they are not paying it back. So every time someone sends them money, or every time they try to buy airtime, that money goes automatically to the loan that they have with the company. So now you're in a situation where you go to the market and you want tomatoes, and they'll say, well, I'll pay you with M-Pesa. And they'll say, no, because I have too many Fuliza loans, I won't get the money. So just give me cash. So people are going back to cash because a lot of these financial services, are still too expensive for low income people. And that's really the tension. The idea was to now use all of this money sending to try to create like a financial system for the consumer in Kenya. So the idea would be to bring people into the financial system and then begin to offer them beneficial products such as loans or insurance, as I mentioned. And this is why the critique has come in so much with concepts like predatory inclusion. In other words, yes, you are including people in the financial system, but to their detriment, right? In other words, they really cannot afford the loans that you're giving them. So, they become financially excluded, and now they are finding themselves outside of all these tools because they don't want to use them anymore. Another thing that fits in with this is that these digital loan APRs are not actually lower than the bank loans. They are relatively expensive microloans. And data security is not very good. As I said, there is SIM card fraud. Agents still might copy your ID number into a written ledger, which can be, obviously found by somebody else. Um, Many Kenyans don't know how they're being credit scored, and the industry has not been very forthcoming about that. So, for example, if you use your phone a certain amount of time and you buy a certain amount of airtime, you can be given a digital loan based on your behavior as a form of collateral. So, many people don't quite understand that, and some people are worried that if you send certain messages, you might be scored on those messages. Like if you ask someone for money, does the loan company actually look at your messages? There's a lot of confusion about how these algorithms actually score people. And the consumer doesn't really know how they're being judged, right? So, and not only has this become more and more like of a concern to the consumer, to the consumers and to the public, but there is also a lot of evidence from financial surveys. There is an organization called Financial Sector Deepening Kenya, which is a trust, and they do a big survey of Kenya, like I think every 4 years, every 5 years, they do a very big survey all about Kenyans' financial health. And I think 2016 was a peak of financial health in Kenya. And for a lot of reasons, global reasons, all kinds of reasons, the economy has become very, very difficult in Kenya, and people's financial health has declined enormously. So right there you have a tension. You have this new money system, but it's not, as far as we know, it doesn't really seem to be giving tangible results in terms of especially low income Kenyans. It is very beneficial to higher income Kenyans, again, because they have access to a lot of financial tools now that they can afford. And they have ways of, they're building houses in rural areas and so on. And so those rural communities might be benefiting, but they aren't really making those decisions. And so they are not necessarily controlling those, those processes. So, you know, uh, this is kind of the central tension. And I think the financial inclusion policy tends to assume that access is the problem. And so once they've given you access, they sort of think that they've solved the problem. But in fact, people have access to mobile money, but they don't have any money. So, the problem of the overall economic circumstances of countries is still fundamental, and new technologies can only do so much when the rest of the economy isn't providing sustenance for people.
Professor, how have gender and care shaped the way digital money is used in Kenya? And what have your fieldwork experiences revealed about women's roles in this financial network?
Sure. So this is a really important topic. The role of women in kind of the financial inclusion effort, I think, is very important. And there have been some really wonderful studies in India that I can think of. The work of Isabelle Guerin, who has recently written a very critical book about the role of women in microfinance. And so, these issues are very, very important all over the world, but women are often targeted, according to Isabel Guerin. I think she's a wonderful book, but women are often like targeted. They are major consumers of financial products. From poor to wealthy, they make a lot of the decisions in the home that are financial. They buy things, they take care of people, they buy the food, they cook the food. So you find them really the linchpin, a lot of this consumer finance, when it goes into the household and then what happens, right? So, in my work, I think there's good and bad. One thing that's very important in Kenya for women are these savings groups called chamas. And of course, savings groups are found in many, many parts of the world, especially the developing world. But now we have them too here, in the US. So everyone's getting into them. They are persisting. And when those groups are women who are well off, they can do wonderful things. And many groups that are wealthy, where people bring a lot of capital, are really creating, a lot of investment capital and loans, and they are actually more popular than traditional banks in a lot of ways. There's still a lot of mistrust of the banking sector, and people often say, even wealthy people say they prefer to borrow and lend with their own community or their own people, right? So these chamas have really been empowered in a lot of ways when people have money, of course. And, oftentimes these chamas where people make merry-go-round contributions, they use table banking, and they can even meet online right now. And they said they borrow and lend from each other using digital money, and they can meet online. Again, this happens for relatively well-off groups, and many not so well-off groups are not benefiting in the way that we would like them to benefit, from these digital tools. And in Kenya, as other places, the work that women do caring for people, women manage school fees, medical care, elder care, the rituals, and mobile money enables women to do this with more privacy and autonomy sometimes. And so that gives them more like forms of status in their community because they can take care of others, again, distribute that distributional role again. But there's that double edge again. Mobile money privacy, for example, protects women's agency. But husbands also have phones and they also have privacy. So, they can also empower themselves to things like gambling. Digital gambling has become very, very common in Kenya, mostly among men, and it has really, in some cases, it can take really significant resources away from a household. So there is always, they're always like a double-edged sword here. But I think what I learned from the women, especially working with MChanga, was that there is an ethic of trust building that these women have amongst themselves. They're very good about sharing their vulnerability. They're very good about knowing how to ask for help. They have that advantage that, I wouldn't use the word subordination, but they're able to ask each other for help and they're able to come together very, very easily. And one of the ladies I interviewed said it's easy for women to ask. It's more difficult for men to ask. It's very difficult as a man, to ask others for money because, people will say, why aren't you a good provider? So there's that facility that women have in coming together that is very, very interesting to me. So I see women as having certain advantages, and that's a little bit different from what Isabelle Guerin found in her study of India. She felt that, the financial services industry was really exploiting poor women. And so I think it's a very complicated picture, right? There are many, many different kinds of women. There are, women have many, many different kinds of abilities, they have different kinds of access, they have different personalities even. And so you really have to do a lot of in-depth research with different kinds of women, with different kinds of economic circumstances as well. But I found that, in this new economy of M-Pesa, women had certain advantages in being able to come together with others. Whereas for men, it's still expected that they give out, it's still expected that they be generous and they be good providers, but it's very hard, it's harder for them, to ask others for help. And so you still find that these women's clubs, that these savings groups are still more common among women than they are among men.
Professor, you connect the rise of digital finance to broader histories of trade, exchange, and social organization in East Africa. What continuity do you see between older economic practices and today's fintech systems?
Yes, that's a great question. Thank you. I explicitly reject this leapfrogging narrative that is very common, and I'm sure in India people talk about it too. Anytime there is something innovative that happens outside of the West or outside of Europe, everyone says, "Oh, this is so unexpected," because it's an assumption that innovation can never happen in the global South. And really, it's the opposite. The innovations are happening, outside of the West. And I think that's always been true in a lot of ways. So digital money is not a rupture with the past. In fact, one of my interlocutors at the beginning of the book specifically saw M-Pesa as a return to older forms of wealth in its social meaning. And I thought that was very, very important to say. So, there's a deep historical through line here, which I think someone could explore more in depth. But the cattle economy, for example, it was a living, expanding money supply. It could be used to build webs and things like loans of cattle, bride wealth. These are still happening. There have been all kinds of currencies in East Africa. One can think of the Baganda ivory discs. On the Kenya coast, there were copper coins tied to Islamic authority. There have been bead and shell currencies, which were worn on the body. And it's quite interesting because when the British colonialists came to East Africa, they noted that many people wore the beads and shells on their body, which is why the original colonial coins had a hole in the middle so that you could, decorate yourself, right? So that was a way of using money that, is maybe surprising. Although if you think about jewelry, and the importance of women's money, like in India with gold jewelry, which is, very important to women, there are a lot of similarities, right? So colonial cash was intended as an instrument of labor control and extraction during colonialism. But again, even with that form of money, people absorbed it and incorporated it into their own existing economic and social arrangements. So they applied it to wealth in people, for example. They were able to adopt those new forms of money into rituals and transfers of wealth. So they've always been very open to new kinds of money. And there are multiple monies, In many countries in the world, these multiple monies are all existing and being used. And we have to learn from that because in the West, there was a long period where, you wanted one supreme money, the US dollar, and we don't know how long that's going to last, So we live in a world increasingly of multiple monies that have very different meanings and, abilities for people, different kinds of technology, and so on. So the study of money is getting more and more interesting all the time. And so, as you're right, I've done some archaeological research, and so the through line here is really about technologies representing value, moving value, and like how that important that is. So that's always changing all the time. Um, Yes.
Professor, in the book, you argue that people in Kenya are not just adopting technology, but actively reshaping it through local practices. Can you share an example of how user transform the meaning or function of digital money?
I think one example is this microloan pilot that actually was the way that M-Pesa was first started. And, when they did, they noticed this airtime. So people would buy a scratch card and they would get the number, and then they would load it on their phone and then send the airtime to a relative, and that relative could transfer it. They could use it to buy things. And so people noticed this airtime money, so they said, let's give people microloans. Let's give people microloans, and then they can repay their microloans with mobile money. So in 2005, this was tested with about 500 microloan clients as a loan repayment tool. But instead, the clients did something else with it. They rescripted it. They used it to send money on to friends and relatives who were not part of the study, which no one had even thought that they would do. And they also used it as a way of, like, they would keep that value on their phone, let's say when you're traveling. And there are a lot of pickpockets, of course, in buses and things. So this had real advantage of them to keep it on their phone. And then they repaid each other's loans sometimes. So this was not the intended use at all. And the Safaricom company realized, okay, people don't necessarily want loans. The assumption may have come, the average person maybe needs money, but they didn't want a loan. They wanted a money transfer service because they are borrowing and lending with their own community. And this is, I think, pretty different. Like in my culture in the West, like money is very personal. And so, like, it's very difficult for an American to, like, ask somebody for money unless it's maybe like a parent, but it's just we don't do that. And so, this is a setting based on that communal kind of aspect of what money is in Kenya. So that's a good example. So airtime and sambaza, designed by network operators as a way to top up your phone credit. People turned it into an informal currency, and that's how M-Pesa was born. They sent it as gifts. They exchanged it through for cash. And next to these call boxes, there would just be people standing there, like an informal broker. And so someone would send you airtime, and he'd say, "Hey, I'll give you money for that airtime." And that's how people got airtime. So there's a whole kind of informal economy of people rising up, around these call boxes to help you transfer this form of value from airtime into cash money. So then they said, well, we'll have an agent who helps you, transfer the money. So it all came from this kind of informal settings and this creativity that people used. There's also, I think another example is like the juggling of digital debt. And there are so many of these now, microloan companies, and some of them are associated with Safaricom, others with local banks, some are international, like Branch, right? And so, really what, to think about how people use those, again, you have to realize this context of the sambaza, because there's an assumption that I get this loan and then I'll make some money and I'll pay back this loan. But really, what people are doing is they get this loan, they give money to a relative who needs help. This other relative might pay them back. Then, and eventually that money goes back to the loan company, but it mediated by this network. So it's not just the person, you don't have just one client when you give someone a microloan. They have a whole social network standing behind them that is enabling them to repay, right? Or in some cases, not enabling them to repay if they cannot help. And so when people are addressing the problem of predatory inclusion, what is it and why does it happen? it could be that this person really wants to pay you back, but they have so many obligations to their social network that that's the reason why they're not paying back the money. And so people might not even think of that because they might look at a potential buyer and see that you make this much money and that you do this and you used for this. So they may assume that you have enough collateral or enough, ability to repay, but they're not figuring in everybody else. And so people are still thinking of their customer as an individual person, not about the sambaza and the kind of multiple, existing obligations and networks that people are actually tapping into. The strategic secrecy is another very interesting thing here. In our phones now, we no longer have a SIM card. It's like very hard to find a phone with a SIM card in the US. I just, a friend of ours came from Kenya and she had an iPhone, but there was a SIM card in it and is a recent iPhone. And what they had done, you know, in somewhere in Kenya, they had modified this iPhone so it no longer had an eSIM, but it had like this little, it had this, you know, Safaricom, she had a Safaricom like SIM card in there. And I was like, how did you do that? Because like you can't, that's not happening anymore here. She said, I don't know, they get these phones, right? And there's a whole culture of repair and modification of phones, right? That we just don't have. And so, I was telling her, you have to get this eSIM. She just didn't understand because that ability to have my SIM or change out my SIM if I have another carrier with a better deal, or the dual SIM phone. The dual SIM phone has more than one, you can have more than one carrier and use different. People want to have that control over their SIM. And they are actually, they're trying to stop that here in the US. They want everyone's phone to be connected to their provider so that the provider has control over your phone. And so I think this is a very, very interesting issue for consumer protection. And in Kenya, you still find that culture of modification where something like an iPhone can be completely reset around, a physical SIM card, which the iPhone did not have. So this is still super interesting, I think. And these devices, are actually being reshaped on the ground, by users in some of these markets. Whereas in the US, like I was telling her, she said, well, let's go to the store and fix the iPhone. And I said, they're not going to know how to fix your iPhone, right? They're just people who want to sign you up for service. They have no ability to fix a phone. Like that's just not something that you can easily access in the US. Like our corporations just have a lot of power over these issues, right? So we just don't have that ability. So it's actually quite interesting. Um, yeah. So I think those are some good examples of that.
Professor, to conclude this episode, I would like to end with a final question. You end by proposing a new theory of money that would inform the design of better financial technologies. What would it mean for fintech designers to take an anthropological view of money seriously?
Great. I think that's a great question. To start off with, we need to get away from that leapfrogging narrative where it's a replacement process. It is not a replacement because we have multiple forms of money. We may want cash money for certain things. We may want jewelry for something else. We may want, digital money for something else. We have multiple forms of money and we make decisions about which kind of money to use. So providers need to understand that they cannot completely replace people's monetary ecologies with something new. They need to think about becoming a part of the existing ecologies of money that people have. Success metrics need to include non-monetary value, and I think that the MChanga study is a great example of that. So it's not just about building financial value or economic value or being able to pay a loan or some of these metrics of financial success. There in the MChanga study, we saw there was a lot of forms of value for people that were not financial. So there was the trust building that people liked the platform for because they could see everybody who had contributed and share that around. There were a lot of reputational goods that people get out of using MChanga, prestige, recognition, status. People also, when they would have one of these rituals, there was the MChanga ledger of all the cash, but many people would also participate by bringing food, cooking food, helping to clean up, bringing, a goat as a ritual animal. So, it can't be all about these behavioral economics nudges. It's got to be about realizing, that people have their existing like preferences, as an economist would say, and those preferences are like more than just externalities. They're like literally the reason why people are drawn to the different facilities or like the different forms of like agency that you can get from different kinds of money. And so this is important. And then the other thing I mentioned is that a debt product should be evaluated as a networked phenomena, not as like not only according to how an individual user might use it. So I think there's some larger stakes. An anthropological view of money asks fintech to design for belonging, obligation, status, the actual currency driving adoption, rather than assuming that people are always maximizing utility and they want it faster and so on. I mean, they want those things. But they also want to be a particular kind of social person through using this money, and that is like, just as important as thinking about how do we lower fees, how do we make this system safer. Those things are important, but they're not the only one, and people like to express their identity with money. If you've ever used Venmo, there are these little characters, and something like that would be great, because like people love to share those characters. The little animations or drawings create a lot of like social value and meaning that people share. So, the money becomes that communication device. And thinking about how you can enrich a digital money product as a form of communication, I think would be a very successful approach. Can people show their gender identity? Can they show, I'm a grandmother giving money to a grandson, and maybe he likes, I don't know, sports, so I can put one of his favorite soccer players there on my message, and that's something that we share, that message. So I think those are the main, I think, threads that I think come out of this from the perspective of like design, or the commercial value, and the commercial decisions.
Professor Sibel Kusimba, thank you so much for joining us and sharing your valuable insights from your publication. It has been a pleasure having you this conversation when we deeply appreciate your time and perspectives. We wish you all the very best in your ongoing work and look forward to more such engaging discussions in the near future. Thank you once again.
Thank you so much for inviting me. I've actually learned a lot just thinking about your questions. They were really excellent questions. And so I'm just so grateful to be a part of this series. Thank you so much for having me.
Thank you.